Picture this. 10 years ago, you could buy an ounce of gold for around $1,200. Today, that same ounce costs over $3,000. Now, think about that. Gold doesn't produce cash flow. It doesn't pay dividends. It just sits there. So why are governments, banks, and investors suddenly obsessed with it again? Because here's the twist. Gold isn't really changing. Money is. Look, most people think gold goes up because it's valuable, shiny metal, rare, historical. But here is what most people don't realize. Gold prices often explode when trust starts collapsing. Trust in currencies, trust in governments, trust in the financial system itself. And over the last 10 years, that trust has been quietly cracking. Now, think about your own life. Groceries cost more, rent costs more, insurance costs more. Even fast food feels expensive now. Yet your money still looks the same. A $100 bill still says 100, but its buying power feels weaker every single year. And that is where this story really begins. Because gold isn't just reacting to inflation, it's reacting to something bigger, something most people never see. Let's rewind for a second. Back in 1971, the United States officially stopped tying the dollar to gold. That meant governments could create money without needing actual gold reserves behind it. And at first, that sounded great. More flexibility, more growth, more spending power. But here is where it gets interesting. Once money was no longer limited by gold, debt exploded. Globally, governments borrowed more, corporations borrowed more, consumers borrowed more, and central banks started printing trillions of dollars during every major crisis. Now, you might be thinking, okay, but how does that affect gold? Simple. The more money you create, the less valuable each unit becomes over time. Imagine slicing a pizza into 8 pieces. Now, suddenly, you cut it into 100 pieces. Did the pizza get bigger? No, you just diluted each slice. That's what excessive money printing does to currency. And gold? Gold cannot be printed. This is what most people don't realize. Gold's rise isn't just about gold becoming stronger, it's about currencies becoming weaker. Now, let's make this real. In 2020 alone, trillions of dollars were injected into the global economy. Stimulus checks, emergency programs, massive interventions. And suddenly, asset prices exploded. Stocks surged, real estate surged, and gold surged. Because when people fear currency losing value, they run towards scarce assets. But wait, here is where it gets dangerous. Gold isn't just rising because of inflation anymore. It's rising because of uncertainty. Wars, banking instability, geopolitical tension, massive government debt, and one specific trend almost nobody talks about. Central banks themselves are buying enormous amounts of gold. Now, pause for a second, because this changes everything. The same institutions that spent decades promoting paper money are now stockpiling gold, quietly, aggressively. Why? Because they know something important. The global financial system is becoming more fragile. Here's what most people don't realize. Countries don't fully trust each other's currencies anymore, especially after sanctions, trade conflicts, and rising tension. So instead of relying entirely on dollars, many central banks are diversifying into gold. Because gold has no counterparty risk, no government controls it, no central bank can print more overnight. And here's where it gets really interesting. Gold is psychological. When fear rises, humans instinctively move towards things perceived as permanent. Land, food, hard assets, gold. That behavior is ancient, thousands of years old. Civilizations collapsed, empires disappeared, currencies failed. Gold remained. Now, does that mean gold is magic? No, and this is important. Gold itself doesn't create wealth, It preserves purchasing power. That's different. If you bought gold in 2015 at $1,100 an ounce and today it's above $3,000, you didn't necessarily become richer. You may have simply protected yourself from currency erosion. And that is a completely different way of thinking. Because this is the hidden shift happening right now. People are slowly realizing saving cash alone may not protect them anymore. Let's say inflation averages 4% annually. Sounds manageable, right? But over 20 years, your money loses nearly half its purchasing power. Half, without you doing a single thing wrong. And that is why gold suddenly matters again. Not because people expect to get rich overnight, but because they're scared of becoming poorer slowly. Now, think about this. If your savings account earns 1%, but real-world costs rise 5%, you are losing purchasing power every single year, quietly, silently, almost invisibly. And gold tends to shine during those moments. But here's the pattern interrupt nobody expects. Gold also rises because people feel emotionally exhausted. Economic uncertainty changes behavior. When people lose confidence in the future, they stop trusting long-term promises. And paper money is essentially a promise that governments will maintain value. Gold doesn't rely on promises. That is the appeal. Now, you might be thinking, so should everyone buy gold? Not necessarily. And this is where nuance matters. Gold has weaknesses too. It doesn't produce income. It can stay flat for years. And emotionally, it frustrates people because it moves slowly until suddenly it doesn't. But smart investors understand something important. Gold isn't usually about aggressive growth. It's about protection, insurance, stability during chaos. Think of it like owning a fire extinguisher. You don't buy it because you want a fire. You buy it because uncertainty exists. And here is where the bigger system appears. Because the rise of gold tells you something deeper about the world. People are becoming less confident that governments can manage debt forever. Now, let's zoom out. Global debt has exploded into the hundreds of trillions. Governments owe massive amounts. Interest payments are rising. Currencies are under pressure. And central banks are trapped. Because if they raise interest rates too aggressively, they hurt the economy. But if they print too much money, they weaken currencies further. That tension, that's part of why gold keeps climbing. This is what most people don't realize. Gold is often less about economics and more about confidence, or the loss of confidence. And historically, when trust weakens, gold strengthens. Now here is the climax most people miss entirely. The rise of gold is not really a story about metal, it's a story of fear. Fear of inflation, fear of debt, fear that the financial system is more fragile than it appears. And the scary part? Those fears don't even need to become fully true for gold to rise. People only need to believe they might become true. That belief alone moves markets. So what do informed people do differently? First, they stop viewing cash as automatically safe, because safety depends on purchasing power, not just stability. Second, they diversify, not emotionally, strategically. Stocks, cash flow assets, emergency savings, sometimes precious metals. Third, they pay attention to long-term monetary trends, not just headlines, because the real danger is often slow, gradual, quiet. And finally, they understand one powerful truth. Money is not just currency. Money is stored time, stored labor, stored energy. And when currencies lose value, people search for ways to protect that stored energy. For thousands of years, gold has been one of those places.
Now, here is the final reframe. Gold didn't suddenly become magical over the last decade. The world simply became more uncertain, more indebted, more fragile. And gold responded to that fear. So the next time you see gold prices hitting new highs, don't just think about metal. Think about trust. Think about inflation. Think about what happens when people stop believing their money will hold value forever. Because sometimes the biggest financial stories aren't about what's rising, they're about what is quietly falling underneath. And over the last 10 years, that may not have been gold becoming more valuable. It may have been money becoming less trusted. If you want to understand how money really works, subscribe.